Welcome, dear traders. You are watching a recap of the Asian session. The last month of winter has come to an end. February turned out to be rather unfavorable for stocks. March started with the release of various economic reports in the Asia-Pacific region. And China's manufacturing PMI index for February and Australia's GDP for the fourth quarter were in the spotlight. Strong data from China helped the Australian and the New Zealand dollars rebound. Market sentiment in the Asian region was mixed today because Wall Street closed February with losses. Traders hope to get some encouraging economic data that will help markets start the month positively. Besides, some economic reports published today were upbeat. China's manufacturing PMI index jumped to an almost 11-year high, and the indicator rose to 52.6 in February from a 50.10 in January, exceeding market estimates of a 50.50. It was the second consecutive month of growth in the manufacturing sector and the fastest pace since March 2012. Meanwhile, volatility in markets is likely to increase due to uncertainty about monetary policy and the state of some leading economies. Investors need to adjust their trading strategies after the Fed stressed the need to stick the monetary tightening for a longer term. The regulator is committed to undertaking new aggressive rate hikes. The key rate may eventually reach 6% instead of 5.4%, a restrictive level for rates in September. For this reason, traders should adapt to new market conditions. However, some speculators are casting doubt on the Fed's hawkish approach. They are still betting on smaller rate hikes. The US dollar index managed to stabilize after a one-day decline. It retreated to the lower border of the range yesterday, but traders resumed purchases. The US dollar looked the best monthly performance since September. Its rally has been driven by positive economic data, upbeat macro stats, and forcing the Fed to act more aggressively in its attempt to cool down the economy. A further trajectory of the greenback will largely depend on non-farm payrolls for February. In the Asian session, it faced a strong bearish pressure. However, it does not mean that it has lost its upward potential. There might be corrective drops from time to time. The US dollar is likely to break through the February highs at around 105.35. After that, the bulls may try to push it to 105.60. The yen made an attempt to recover amid a slide in the US dollar but failed. Bulls are now aiming at 137. Yesterday, they were able to push the yen as close as possible to this level, but there was a no test. The price did not consolidate there as well. However, analysts believe that the dollar-yen pair will reach this level in the near future. Given a strong bullish momentum, the pair is expected to climb to 137.90. At this level, bulls will face the resistance level. As the pair looks overbought, it might consolidate there for a few days after a jump above 137. It's still hard to predict how far the yen could advance within a short-term corrective movement. It's likely to move in the range of 135.80 and 136.60. A breakout of 135 will confirm that the rally of the US dollar, which began in the middle of the month, has ended. Australia unveiled its GDP data today. The country's economy expanded by 0.5% in the fourth quarter of 2022, undershooting the forecast reading of 0.8%. The difference is rather striking, especially after the upwardly revised figure of 0.7% in the third quarter. This was the fifth consecutive quarter of economic growth, albeit at the weakest pace. Over the year, the economy grew by 2.7%. In 2021, the same indicator totaled 5.9%. The Australian dollar is quite sensitive to news from China, hence it rebounded sharply following strong data from China. The AUD-USD pair won back its losses incurred at the start of the session. It resumed growth despite investors' concerns about the state of the Australian economy. Stubbornly high inflation and aggressive rate hikes are adversely affecting the economy, especially consumer spending. The AUD-USD pair gained 0.5%. It rose to 0.6760 from the 2-month low of 0.6695 reached at the start of the session. Its decline was triggered by weak domestic data indicating a slowdown in the economy at the end of the last year. Although the Australian dollar settled at 0.6700, a further fall to 0.6660 may take place. And the next potential target is the 0.6550 level. The support level is located at the January low of 0.6689, while the resistance level is seen at 0.6796. In February, bears had full control of the New Zealand dollar. On the first day of March, sentiment improved thanks to China's strong data. Yet the prospects for the Kiwi dollar pair are brighter. In 2023, it's likely to resume a bullish trend. Nevertheless, the bearish trend will remain intact in the short term. The economic calendar remains empty. Today, for New Zealand, there were no important reports and events. Therefore, there will hardly be any drastic changes in the trajectory of the pair. In the Asian session, the pair was trading at 0.6220, gradually rising. If it consolidates above 0.6275, the bears will lose the upper hand. In this case, it might even hit 0.6525. And that's all for now. Hit the subscribe button and have the latest market news at your fingertips. Please leave your comment down below and see you soon.